Hello and welcome to Hotel News Now's Day 2 ALIS recap video. I'm Stephanie Ricca, editor-at-large, and I'm here with Jeff Higley and Patrick Mayock. A lot of optimism that we're hearing in the halls here at ALIS. Jeff, what do you think?
You know, lots of stuff in the halls, like you said. It's a lot of positive talk about growth, about mergers, about acquisitions. You've got Marriott, you've got CHM Warnick, you've got Best Western talking about growth. The guys at Hard Rock are talking about growth. The new Hyatt brand, Hyatt Centric. I mean, there's just so much. I can't recall. I've been to every ALIS that's been held, and I can't recall a year where there's just so much activity. The one thing that we do have to keep an eye out, though, is next week the CREF conference in San Diego, where all the lenders meet, is going to go a long way in determining how loose they get with their capital going forward. So by the end of February, we'll know whether the CMBS markets are going to be really strong, distributing money like drunk sailors, or being a little bit closer to the vest. And obviously, for all of our sakes, we hope they're holding it a little bit closer to the vest.
See if they put their money where their mouth is.
That's right.
Or where our mouth is.
That's well, you know, the key is everybody wants to grow, and that's what driving the optimism here. Patrick?
You know, you talk about optimism, it's kind of weird. Our industry seems uncomfortable with prolonged success. So a lot of the panels today were centered around trying to find what could go wrong. So a lot of talk about oil prices. Is that going to be bad? Nobody really knows, but they were kind of talking a lot about that. Also a big focus on currency exchange rate. That one's it may have a more tangible impact on our industry, creating a shift of inbound and outbound travel, and also a shift of investment dollars. I mean, I couldn't tell you how many panels I sat through where somebody mentioned an inflow of investment into the U.S. from the likes of Russia, Latin America, China. I mean, really everywhere. Whether that's because investors want to get their money out of their own hands and out of their government's hands, or whether or not they believe the U.S. is a viable, good place to see a return on that dollar spent.
I think it's the second scenario, based on some people I talked with as well.
Definitely. The U.S. is still considered one of the best safe havens for money in the world, and we're going to keep it that way, right?
Yeah.
So one other note, you mentioned the oil areas, and in the U.S., lenders have gotten real tight when it comes to lending for new projects in the oil fields and gas fields. They're just not convinced that those are the right plays now. So it'll be interesting to see that. And then finally, a lot of people have been talking about preparing for the inevitable downturn. You know, you mentioned, yeah, maybe we're a little bit scared of being too successful, but I think the one thing that we've learned from the last two downturns is you can't get caught with your pants down. You got to be prepared. You got to have the plan in your bottom drawer. You got to review the plan for every potential scenario to make sure that when it happens, you're ready and you can react quickly to survive.
Yeah, definitely.
We'll see if the industry learns its lesson the next time around, but in the meantime, times are looking pretty good. And with that, we'll sign off and we'll see you next time.